Hi guys, welcome back to the Blockkoin Academy. This is lesson 4 where I'll be helping you guys learn trends versus ranges and how to trade each of them. So in lesson 3 we covered support, resistance and market structure. Today we'll be covering trends versus ranges and how to approach each environment differently. Every market is either trending or ranging. That's the only two possibilities of how the market is moving. So your job is only to identify which one you are in. So for this video, I'll be staying on the 1 hour time frame on Bitcoin, and I'll go through the 5 steps today. So step 1, what is a trend? A trend is when price constantly moves in one direction. Just like in the last lesson, a uptrend is when price is making higher highs and higher lows, and in a downtrend price is making lower highs and lower lows. Just let me get a visual for you. So in this pattern over here, this is clearly a downtrend, because as you can see, price is making a high, a lower high, a lower high, a lower high, and if you look at the lows, price is making a low, a lower low, a lower low. So that means it is a downtrend. Now to find an uptrend for you guys in this massive bearish market, this is an uptrend. So you have your low, your higher low, your higher low, your higher low, and then you have your high, your higher high, your higher high, and your higher high. So that is what an uptrend is, and that is what a downtrend is, right? So this is trending structure. Price is expanding into one direction. In a trend, you look to trade in the direction. So in this case, you look to sell instead of buying, because you are trading in a bearish market. In other words, a downtrend market. So moving on into step 2, what is a range? So a ranging market is where price moves between a clear support and resistance without making new highs or new lows. So let me just get you that image for you. So over here you can see a ranging market. Price is moving between this resistance level and the support level, constantly just staying in between, touching support, moving up, touching support, touching resistance, pushing down support. As you can see, it's just sideways movement, otherwise known as a ranging market. So price is not expanding, it is just rotating between these two boundaries. So ranges create fake outs or fake breakouts. Trends create continuation. Moving on into step 3, how to actually trade in a trend. So starting with the uptrend. So with an uptrend, you always look to buy near support and sell near resistance. So for this example, it's obviously easier to see in hindsight, but as you're looking at the charts, you'll be able to see the uptrend, and you'd always be looking to buy on the support lines over here, and you'd always be looking to sell on the resistance lines over here. So that's an uptrend. On a downtrend, however, it is more or less the same thing. Always trying to sell at resistance as well, always trying to buy at support, sell at resistance, but ideally you are always looking to try and sell, just because that is overall direction and you'll have a higher possibility or probability with your trade. Always look for sells in a downtrend and always look for buys in an uptrend. Now moving on how to trade in a range. That will be our step 4. So basically the same as the up and down trends, but this is a bit more simple, but there's actually a bit less of a probability of your trade being correct. So in a range, you're just trying to sell at resistance and buy at support. As you can see, for example, over here, price came into resistance, sold into support, bounced here, tapped here, bounced here, kind of hovered around the support over here. Then it pushed up, came back down to support, pushing, back to resistance, it sold back to support, and so on and so forth. So always buy near support and always sell near resistance. So yes, so the reason you don't buy anywhere in between that is because there's no real probability of a trade. You can't buy over here because you don't know if price is going to go back up to resistance or back down to support, because there is no clear direction. So in other words, you have no bias. You are only trading based off what you are hoping price does in that buy zone or sell zone. Step number 5, identify environment before trading. What do I mean by that? Before entering any trade, ask yourself, is market trending? Is market trend ranging? Or is it bearish or is it bullish? If trending, trade pullbacks in direction of structure. In other words, in this situation over here, market is in a downwards trend. So if you're trading this, always try to trade in the direction, meaning always try to find sells at resistance. In other words, with the bullish trend, always try and buy in your bullish trend, always try and buy at those support levels over there, and always target your resistance. And just like we said with ranging, always try and buy at support and always try and sell at resistance or at those levels at least. So always identify the environment first. Strategy depends on environment. So that will be all for lesson 4 today. Next lesson we will cover breakouts versus fake breakouts and how to avoid getting trapped. Just like last time, always protect capital first, growth comes after. Thank you guys, that will be all for today. I'll see you in the next one.